Hi everyone, Brian here from DAiM. This is the summary video to go on with our latest newsletter. You'll notice some changes here. We did our yearly brand update, and at the end I'll go over some things that are new here at DAiM. Let's hop into the forecast. We see Bitcoin in the medium term between 20 and 30K. We are below that here now in the short term. And yesterday's wick down is really related to the macro environment here. We have the FOMC meeting coming up, so we are going to see rates go higher to try to curb this inflation. We do think there is the possibility for a wick down to 15K. If that happens, there's some things you can do. I'll talk about that later in the video. We have an exciting chart here that Mike Cerruti on our team put together. And now that we have history back to 2012, we can also make a bit of a projection in going forward into the next halving. So something to notice on this is these events in the halving and how they go from the event to peak to trough. Okay, so the first halving was in 2012. 50 units of BTC were awarded to miners. That got dropped down to 25. And then the most recent halving here was in 2020. 12.5 units of Bitcoin down to 6.25. And then if you notice, the peak price went to 67,617 the following fall over there. Okay, so what does this mean? Let's look at these troughs and how they're kind of in the 2-year cycle right after the price peak. Okay, this next table will show it really well. Okay, so this is the table form extrapolated from that prior chart that we were looking at, and focus in on the fourth line, days from peak to trough from each cycle here in these columns. Maybe it's about 400 days, and here we are just under 300 days. Does that mean that we have exactly 100 days left till we get to the bottom? No, it could happen tomorrow. It could happen in 50 days. It could happen in a couple hundred more days. But what this is starting to tell us is that there is a probability that we are in a great zone to be allocating and accumulating units in Bitcoin. So this is something to keep in mind despite all the fear and negative press that's out there. The hardest work done is now in these times. Next is a great table from Blackrock. It shows from 2013 each year through 2022 returns of different asset classes. So you can see here Bitcoin and cryptocurrencies are not alone in being down a lot and in the red. You can see that this year just about everything is down and just commodities are up. And if you look back in history, there's really never been a year where this many asset classes were down this much. So it's not alone, it's just really difficult in the macro environment. So hold on. We have a new service at DAiM, which is our blended management. It's where we combine equity and cryptocurrencies for qualified individuals wanting to have these assets together and managed in one place professionally. So what we do is we take a select group of quality equities and bring those together and add in our crypto model portfolio. And this gives a nice rounded new modern portfolio to invest in. If you have any questions about this, please let us know. Okay, let's wrap things up. A few things to leave you with. If prices do go lower, look to tax loss harvest if you can do so. Document that stuff really well and provide it over to your CPA. If you have money earmarked for cryptocurrency investing, move that over. You'd be surprised how quickly you'll run out of time when the cycle does change to a bull market. And lastly, don't let the negative news get you down out there. All these media companies need to make money and they need the clicks. Remember the core properties of Bitcoin and elements of really good other cryptocurrency projects and blockchain technologies that are out there, and keep your eye on the long-term goal. The space is going to survive and you're going to be really happy you did in the long run. All right, everyone, have a good day. Bye.